What's up, everyone? It's Karthik with MoneyVest. So with over $400 billion sell-off on the day today, leading with the NASDAQ here, Magnificent 7 stocks shedding off over $300 billion with tomorrow, Jackson Hole Economic Symposium and Jay Powell talking. We've got lots to unpack in this market update and for us to get ready for what is going to be quite a decisive end to a very indecisive week so far, because the markets are basically flat on the week so far. Monday, Tuesday was very strong. Wednesday, Thursday, a little bit more flat to slightly down, with the NASDAQ, of course, selling off quite aggressively on the day today, down over 1.67%, consistent downtrend throughout the course of the day of lower highs and lower lows. Of course, we had the S&P 500 also down almost 90 basis points, with the Dow Jones over 43 basis points lower, or almost 200 points on the day. So we got lots to unpack, and it's really going to come down to this man and this man alone for tomorrow at 10 a.m. Eastern. That's when he's going to start addressing at the Jackson Hole Economic Symposium, and I will be live to cover the entire speech. So make sure that you tune in at 9:30, pretty much actually a little bit earlier, because we're going to be live during market open, and then we're going to go all the way through to Jackson Hole Economic Symposium from Jerome Powell's press conference at 10 a.m. Eastern. So get ready and let me know in the comment section down below, what are you expecting for tomorrow from the markets, red or green? What are your bets for tomorrow? I'm actually planning on selling more puts on NVIDIA. I actually sold one today, and my plan is to sell 5 to as many as 6 more puts for next week, because we do have earnings coming out for NVIDIA. So it's a pretty big trade that I am taking, worth almost $70,000. So I'll keep everybody updated on our Discord. So let's get started here. This is the entire sell-off of all the S&P 500 companies on the day, over $431 billion sell-off. This is a spreadsheet that's tracking the market caps for all the 500 companies in the S&P 500. And if you come over to our first spreadsheet, this $326 billion is for the Magnificent 7 companies. As you'll notice that these are the 7: NVIDIA, Microsoft, Apple, Tesla, Alphabet, Meta, and Amazon, and all of them selling off quite aggressively, with the exception of all of them. They were all 7 down on the day, with NVIDIA, of course, losing the most, down over 3.7%, over $117 billion sell-off, $63 billion coming off of Microsoft, Apple with a $28 billion. Then we had Tesla shedding over $40 billion. Another $41 billion coming from Amazon. Meta and Alphabet were down $8 billion and $26 billion respectively. So again, quite an aggressive sell-off. This right here is my yesterday's update, where I also mentioned in our Discord, I sent out an update with the entire video link as well. I basically mentioned that, all right, folks, the risk reward is officially tilted back to being very unfavorable. Want to be very clear that it's not to say that there isn't anything worth buying or no cash worth deploying, but the markets have moved up over 9% since the Monday's low from back in August 5th, so a couple Mondays ago. And VIX has now moved back to sub 15. Of course, this was yesterday, and we need to be more careful here, considering that some profit taking is possible. And I think that's what today was really like. There was a little bit of profit taking ahead of NVIDIA's earnings and tomorrow's Jackson Hole Economic Symposium, but there is a game plan. And my game plan for the next 2 weeks, as I've already mentioned, is raising a little bit more cash, getting up to that 20-25% level again, to have some buying power, some dry powder ready for if and when we actually see that market seasonality once again play through in the month of September, which we'll talk about in just a minute. Now, coming over to this spreadsheet, this is the Jackson Hole Economic Symposium playbook. And on the day, as you'll notice, the markets were down about 0.89%. So we were down a little bit over, 0.89 on the day. So let me just go ahead and put that as a minus sign. There we go. And that was one day prior. And tomorrow we'll see what that number looks like over here for when Jay Powell is talking. Last year, on the day of, we were up over 0.5%, but we were down over 1.3% one day prior to Jerome Powell's speech. In 2022, 1.4% higher one day prior to Jay Powell's speech, and then down over 3.3% on the day of Jay Powell's speech. However, we already have a little bit of an idea and an understanding on what exactly is he going to be talking about. Again, very, very data-driven approach, very much optimistic about a potential rate cut, especially after the huge revision that we saw from the jobs report from the BLS yesterday of over 818,000 jobs just pretty much disappearing in the last 1 year, and going from 2.9 million jobs last year to 2.1 million, with an average monthly job gain of about 175,000 from the original 240,000 something jobs gain. We have dropped significantly. So my expectation from Powell tomorrow is really going to be some type of dovishness and open to the idea that September is indeed going to be the month where they actually begin rate cuts. So this right here, 10 a.m. Eastern, is going to be the speech from Chairman Jerome Powell. I will be live, like I said, again tomorrow, Friday, 8/23, August 23rd, economic outlook at the 2024 Jackson Hole Economic Symposium in Moran, Wyoming. So very, very important day. Make sure that you mark your calendars and don't miss out and tune in on that live stream. Now, also make sure that you subscribe. Share this video because it's going to be a bit of a longer update. All I'm asking is that you drop a like and subscribe to the channel. We're almost at 82,000 subscribers. I would really, really appreciate that. And again, this right here was the state of the market. All Magnificent 7 stocks selling off, shedding over 326 billion. We also did have a pretty significant sell-off in semiconductors. If you take a look, Intel was down over 6%. Quite an interesting sell-off. Then we had, on semiconductors down over 4.3, Lam Research down over 4.3, AMAT, Applied Materials down over 4%, AMD was down almost 4%, so ASML also selling off a little bit over 3.8, so there was a bloodbath across the board for technology and for semiconductors and pretty much the entire market, with a little bit of defensive positioning here from the markets as well. So again, this right here is the extended hours. I also want to mention that we have 2 more spots left. If you are interested in joining our MoneyVest community, link's going to be down below. This is everything that you get: access to the MoneyVest Discord, the MoneyVest website, as well as engaging and interacting with over 1,000 investors and traders, along with all of my trade alerts, investing alerts, options alerts also included. So link's going to be down below. Would love to have you on board. There is a 16% annual discount as well. So moving over, the so-called Magnificent 7 mega cap growth stocks weighed heaviest on the tech NASDAQ, and there doesn't appear to be any kind of a clear catalyst as to what's driving this sell-off. This was Scott Ladner, Chief Investment Officer at Horizon Investments. People may be trying to square positions a little bit ahead of NVIDIA next week, or risk out ahead of U.S. Federal Reserve Chairman Jerome Powell's Jackson Hole economic speech here. And this is everything to expect from Fed Chair Powell's speech on Friday. And this was from Lou Crandall, and a former Fed official and now chief economist at Washington ICAP. He says, and I quote, "Stop me if you've heard this before. They're still data dependent." A dealer broker where they've worked for more than 40 years, he expects Powell to be directionally unambiguous, and specifics about how fast and exactly when will depend on the data between now and the meeting. Little doubt that they will start cutting in September. So that's what he expects from Jerome Powell. And again, like I said, very, very similar to what we've already learned from previous FOMC meetings. So it may or may not be a market moving event, but still the markets are really anticipating on potentially higher volatility going into tomorrow's numbers. And volatility, speaking of, is set to return amid U.S. election uncertainty as well. So investors should buy protection now, as volatility seen in August is likely to return amid closely contested U.S. election race, according to a report released Tuesday by BCA Research. Investors should buy protection against further volatility. The shakeup in early August was a taste of things to come. So this right here is where the expectations are from the market with regards to interest rates. We're still pegged for a 75% probability for a 25 basis point cut in September. So September 18th is when the next meeting is. And then November, the markets are pricing for another 25 basis points, and then of course a 50 basis points cut coming in December. So all in all, markets are pricing in for a full 100 basis point cut in 2024, and then additional 100 basis point cut in 2025. That's what the markets are pricing in. In my opinion, that is, well, I guess it was optimistic prior to the jobs revision. I feel like now it's a little bit more of an appropriate expectation that unemployment rate is accelerating higher, and it's potentially going to get worse if rates don't come down fast enough. So in my opinion, I think rates are headed lower. We just still don't know to what extent and by how much. Now, let me just move over to some spreadsheets because I think that's going to be far more important at the moment. So this is where we are with the current state of the market. We're still well within 2% of its all-time highs for the S&P 500. So again, even after today's sell-off, we are well within range of all-time highs here. The Dow Jones also less than 2%. NASDAQ was very much in a dip up until today when it dropped over 1.6%. So we're back in a pullback, down over 5.67%. And the Russell 2000 still in a bit of a correction, down over 12.5% from its all-time highs. Now coming over to the streaks, we have now finally, of course, broken the streak. We broke the streak on August 20th when the markets were down about 20 basis points. Yesterday, we were up 42 basis points, and on the day today, down almost 90 basis points. So once again, 3 back-to-back flips here from the markets, from red, green, and now back to red. And this right here is the MoneyVest dashboard, which you guys are so much waiting for. 3.84 is where we are for the MoneyVest index. We were as much as 3.96. The prior reading was 3.96, so very close to 4. The VIX reading at 17.5, so of course putting us at almost 50th percentile again. 12.2% is the contango level. We got 71% stocks trading above their 50-day moving average and about 74% of stocks trading above their 200 moving average. The put call ratio is creeping up, something that we really want to address here because we were down to as low as 0.7. Now we're back up to 0.9. If this number crosses over 1, we would be we would have more puts than calls on the market, and that's just the market's way of telling us that they are expecting more potential downside. Why? Because they're hedging with puts to protect against that downside. So right now we're 0.92, but we're edging up closer and closer to 1, and potentially even higher 1 is going to put us at the 68th percentile, and that's going to turn green. It's going to be one of our first metrics to turn green from a signal standpoint. Just a little bit under 58 RSI, so we're in the 60th percentile for this as well. So we're still more unfavorable on the risk-reward trade-off here, so there are no aggressive buy signals just triggering off as of yet. Now coming over to some of the other readings. So if you take a look at the market, so S&P 500 closing in at 5570. So if I plug in that number, 5570, our valuation right now is 22.73 based on an earnings multiple or earnings per share of $245 in 2024. So that puts us at 22.73, and this has been a very, very strong recovery for the market. We are now in the 90th percentile once again, which our meter tells us we are a little bit more on the expensive side, right? So the closer we get to 22, 23, 24, 25, the higher, of course, valuation is going to be, and the more expensive we are from a fundamental standpoint. This is more of a valuation / fundamental metric for the market. So that's where we are, giving you a little bit of an overview of this metric. Now, a few more things that I wanted to address. Was it this spreadsheet? Yes. So this right here is also the concentration for the market, right? So we've got the big 3, the max 7, and the top 10. Big 3, as I'm sure you know, it's Microsoft, Nvidia, and Apple. Max 7 is the Magnificent 7, and the top 10 also includes for Berkshire Hathaway, Broadcom, and then just one more company, which I forgot what it was. It's Eli Lilly. So these are the 10 stocks that kind of make up the top 10 for market cap for S&P 500. And these are the levels of concentration. So you'll notice the big 3, which is Apple, Microsoft, and Nvidia, make up for almost 20%, right, of the S&P 500. So that's just a little bit over 0.5% of the S&P 500 makes up for 19% of the S&P 500 in terms of its concentration, in terms of its weight. Magnificent 7, which is just over 1.4% of S&P 500, makes up for over 31% of the weight. So a third of the S&P 500's weight is getting pulled by Magnificent 7. So again, tech leadership is very, very high. And then if you account for top 10 here, include for the other 3 companies, and now we're looking at 35% concentration. This numbers, I believe, was down to as low as 28, 29% as the tech continued to sell off in the last couple of weeks. But then, of course, as we have recovered back up, it's back over 30%, as we're pretty much, trading well within striking distance of its all-time highs. Okay, now coming over to the markets here. Before we get further, just want to quickly go over this entire presentation. So again, coming over to this was the sell-off. Nvidia now over 3.7, Tesla, Amazon, Google, Apple, Meta, everything selling off. So a little bit of liquidity coming out of technology, out of semis, out of software, out of cloud, over to other parts of the market. So once again, this is just the market's way of telling us that we are getting defensive. This is markets getting defensive at the moment. This right here, again, is the entire market. So if you come over, you got cyclicals, technology, and comm services, 3 of the big sectors where Apple, Amazon, all the Magnificent 7 pretty much lives, selling off quite aggressively, anywhere from 1 to as much as 2%. In the last 1 week, energy has been the biggest laggard, down over 1.7%. However, on the day, market's positioning definitely shifted back to being more defensive. Bitcoin just a little bit over 60,000, and Ether just over 2,600 as well. So tomorrow's going to be quite an interesting day. And finally, of course, jobless claims also came out at 232,000, which was 4,000 higher week over week, but still a really, really low number at the moment is what we are seeing. Also, do remember, September is right around the corner. So just a couple of weeks left for September to begin. And this is a chart showing us all the Septembers going back as far as 2011 with an average loss of almost 2%. median loss of over 1.5%, and the probability for us to see a loss over 61% here for September. And this is volatility. On average, volatility has spent months of September going back as far as 2011, so 12, 13 years worth of data at almost 25, with a median VIX value over 20. September historically has been a higher volatility month, and also a month where we have seen the markets pull back. This is just going back as far as 12 years. And again, 53% of the times it has spent above 20. So again, those are some things, those are some stats for you, some food for thought. Okay, coming over to volatility, again, down up almost 8%. We're kind of creeping up to as much as 18.6 to as much as 20. So keep a close eye on those levels. We'll continue to watch this very carefully, and we'll send out alerts in our Discord when there is opportunities to deploy cash again, and when there are opportunities where the risk reward is once again becoming more favorable for us. The Money Invest Index we've already gone over, but like I said, this reading will get updated. It was at 3.96 as of yesterday, and crude oil prices continue to come down at a very strong support, sitting roughly at just under $73, and that right there is going to be that level to watch for crude, sitting inside this area of rectangle, and of course that area of support at the moment. And then coming over to the market, so this right here is QQQs. Now I want to be very clear that we're well within the trend, because we haven't really broken down below this 474 support. So speaking of the technicals, what you'll notice is this consistent drawdown, right? So this right here, lower highs and lower lows for the market. We got up to this lower high and then of course broke out very, very nicely. And now we're only seeing a little bit of a pullback, right? So if I just remove everything and just point out to a small pullback that we're seeing, a small dip, that's what that is after a very, very strong, consistent rally from the NASDAQ. So this is nothing to be afraid of. This is just a healthy pullback, healthy dip is what we really wanted to see. And we're coming back down to 474, 475. As you can see that after hours, we're back over 475. And that is that area of support. That's the green rectangle that I really want you to focus on, because that is the area of support and demand for the NASDAQ. Same thing is true for the S&P 500. You can see how perfectly it is just validating that level. So we pushed up and we came back down to validate this green rectangle. That's where the area of support or the demand sits for S&P 500. So if I zoom in just a little bit, after of course having such a significant rally, we gapped up a little bit and dropped over 1.3% intraday, coming down to once again a very, very strong area of support and demand for the market. So tomorrow is going to be the breaking point. Tomorrow is the test for the bulls, whether they can hold this support, whether we can actually see that validation of that support at 55.65, or if the bears have the strength to break us down this level once again, and for this support to once again turn into a bit of a resistance for the markets again. So again, tomorrow we'll find out if that's going to take place, but as it stands right now, very strong support. We're coming back to retest. I mean, if you come back, take a look. This is the exact level where we have gotten rejected, right? This is a level that S&P 500 struggled to break out of over here back in July. This right here back in at the end of July. So we struggled to break out of that level. And then once we finally did, we're simply coming back to validate this old resistance as a potential new support. So tomorrow we'll find out if this level is indeed going to be a support, or if the bears have enough momentum to the downside that can really flood us below that 55.65 levels. We're like kind of like 5 points away, but tomorrow's Jerome Powell speech can really be a big wild card for the markets. Coming over to Apple stock. So Apple here on the day, down a little bit over 83 basis points. Why do I feel like I'm missing something? Why do I feel like I have a lot of spreadsheets open and I had something that I wanted to show you guys? Let me see. Streaks, not quite. We've already gone over the stats. Let me just see. This we've already gone over. I just want to make sure that I'm not missing out on anything. Valuations we've covered. This is the market sentiment. This is right here. Volatility, S&P 500 in September, seasonality, jobless claims, market concentration. So I feel like we've covered everything. I feel like we have. But I don't know why I feel like I'm missing something. Anyway, if there's anything, I'll comment down below. Apple here, there's a resistance at $236. That is going to be that next target as we have discussed. But we are, again, kind of pushing higher a little bit more to the overbought side, especially on the 4-hour chart. If you come take a look, again, we're starting to round off a little bit after this significant rally with the RSI, the MACD, and the L3 Banker Oscillator all perfectly positioned for us to see a bit of a pullback. And support level next is going to stay put down to $207 to as low as $196 for Apple as well. Coming over to Amazon. So Amazon here on the day, also down a little bit over 2.2%. So definitely selling off quite aggressively. Next support is going to be down to 173 for Amazon, with a resistance all the way up to as much as $189 to as much as $190 for Amazon. If you do end up, let's say, breaking down below this level, next target is going to be $166. But same story on the RSI, MACD, L3 banker oscillator, everything suggesting for a bit of a correction, bit of a small dip, I should say, that's possible after seeing a very incredible rally for Amazon. So next support's really going to be down at 173. Tesla getting absolutely sold off aggressively here, down over 5.6%. And, you know, as we discussed in our previous updates, that Tesla is well within its downtrend, making lower highs and lower lows. So this right here, lower highs, lower highs, lower highs, and then lower lows, lower lows, lower lows. So we're still well within a downtrend where Tesla is going to find a very difficult time breaking out of its certain resistance levels because we've got so much supply. We got a huge resistance sitting right here at 233, massive supply sitting at 268, and then of course, not to mention a lot of supply sitting in the 300s and 400s. But we've got way a lot of time to get up to those levels. But at first, we're still well within this downtrend of lower highs and lower lows, and Tesla continues to appear very, very weak at the moment. So support level near term is going to stay put down to $208 a share for this company. That's exactly one of the reasons why I've sold calls that are going to print if Tesla does pull back. Next one on the list is going to be my big trade for next week, and that is NVIDIA. I was watching this stock very closely today, down a little bit over 3.7% for the right reasons, considering how much it's rallied. I think over 40% from its Monday, August 5th close, 43%, and it's now starting to roll over a little bit. Again, RSI, MACD, L3 banker oscillator, all suggesting for a potential dip in NVIDIA, considering how overbought it was, and resistance all the way up to as much as $139 to $140. That's pretty much the all-time high, and support level down to as low as $96 per share for NVIDIA. So that's going to be that level to keep in mind for this stock. Advanced Micro Devices also rolling over on the day, so selling off a little bit over 3.8%. So this right here is the entire technicals. Again, we broke out of that resistance, coming back to retest old resistance as a new support. So this is the inside of this green rectangle, or that support, where it's coming back down to retest that level again. And resistance is going to be all the way up to $185 for Advanced Micro Devices as well. Talking a little bit about PayPal, and PayPal here continues to do really well. I mean, it's kind of outperformed the market, so I'm happy. PayPal has been outperforming the market. So if you come over to PayPal versus SPY, not only is it hitting a 52-week high, it's also beating the S&P 500. Take that, S&P 500. I mean, this right here is a significant outperformance of 21% since the end of July. That's actually quite a decent, significant, I would say, outperformance on PayPal's side with respect to S&P 500. So next target is going to be at $76, $77. So this right here is going to be that next level to watch as a target. However, we are incredibly overbought. As you can see, the RSI, the MACD, the L3 banker oscillator. So similar to S&P and NVIDIA and some of the other companies, I wouldn't be surprised if PayPal also takes a little bit of a breather, right? So comes down where the support is going to stay put at $68. So wouldn't be surprised for it to see it come down. And then, of course, get up to that next level in that next leg up rally here to $77. So that's pretty much going to be my expectations of the technicals and how they play out moving forward. Talking about Visa, still well within a downtrend, so lower highs and lower lows. In fact, it's coming up to its lower high over here. It's starting to break out above its resistance, and support level is going to stay put at $266, but still well within range of its downtrending channel. So this right here, consistent lower highs and lower lows for Visa. So next resistance and target, very, very important at $272 for Visa moving forward. Talking a little bit about Meta platforms, and Meta here on the day actually hit a new all-time high of well over $544, but then of course sold off intraday, 60 basis points lower as it gotten up to its supply and that resistance. And again, a bit more on the overbought side, as mentioned to us in our previous videos. RSI, MACD, L3 banker oscillator, everything getting up to those levels here. And resistance, like I said, it's going to stay put at 540, support level down to $450. Wouldn't be surprised to see a little bit of red in Meta platforms as well. Netflix, on the other hand, also hit a new all-time high, I think yesterday, just down to $688 at the moment. And this right here is what Netflix looks like. It seems like I'm having some trouble with my network. There's some Wi-Fi issues here. But Netflix, $688, $689, so down a little bit over 1%. And again, we discussed how it's getting up to its resistance. It was incredibly overbought, so would not be surprised to see a little bit of a pullback for Netflix as well moving forward. And then finally, Google and Microsoft. I'm just going to wait a couple minutes. If this thing improves, I will open up the charts. But Google and Microsoft also down anywhere from 1 to 2% respectively. And, I've been picking up both of those stocks here because they haven't really moved all that much, right, in the last couple of weeks here since the Monday, August 5th lows. Google and Microsoft were still only up like high single digits. They didn't even crack above the 10% level. Okay, take a look at Netflix here. Looks like the Wi-Fi is back. So let's see. There we go. And resistance, as we discussed, at $701. Again, RSI, MACD, L3 banker oscillator, all of them suggesting for a little bit of a pullback for Netflix. And then finally, if you come over to Google, down a little bit over 1%. So again, starting to sell off, trading at support. It does start to feel a little bit like a bear flag. Wouldn't surprise me if you do see a bigger sell-off for Google, as this could be the pull, a flag, and a bigger sell-off or breakdown, getting us down to $153. So that right there is going to be that next support level to watch for Google moving forward. And I believe the same could be true for Microsoft. However, this is more of a head and shoulders, not so much of a bear flag breakdown, but more like a potential left shoulder, a bigger head, and then another right shoulder with a neckline sitting right there. So a breakdown below that 390 sub $400 level is possible for Microsoft as well. And then finally, we come over to Enphase, which was down a little bit over 2% on the day. So selling off actually over 3% down at $215. And again, this is a stock that's been consolidating sideways for a really, really long time. As you can see that it's just been trading back and forth in that range for a really, really long time. So resistance is going to stay put right there at $120 with all the way up to $136 and a support level sitting roughly at $92 a share. And then finally, if you come over to Costco, pretty much trading at all-time highs. So this right here, very, very strong area of resistance for Costco, and very, very flat. And the RSI, the MACD, also potentially suggesting for a small pullback possible for Costco, but it does trade at very expensive valuations to begin with. So hope you all enjoyed this video. Get ready for tomorrow. Very, very big day. We got Jay Powell on the microphone, and I'm sure there's going to be volatility, but we'll be live to cover all of this on Friday, August 23rd, tomorrow at 10 a.m. Eastern. So tune in, call your friends, call your family members, other traders, investors who might be interested in joining us, and definitely do take advantage of the 16% annual discount with limited spots left if you are interested in joining our MoneyVest community, getting access to all the trade alerts, ideas, access to the website, and be able to engage with over 1,000 traders, investors globally, and access all of our research, our analysis, and all the trade alerts as well. So links going to be down below. Would love to have you on board. As always, happy investing. I'll see you all in the next video.